Brad Williams, Frugal Finance. This is just an interesting article dated long ago, but just a sampling of traders when they're working 14, 16 hours a day, doing the same thing over and over and over. They get bored. When they get bored, they need to come up with some creativity. In many cases, that activity becomes an inside trading or an illegal activity. This was dated long ago. This happened in 2010, but they call it the flash crash. And we see this kind of stuff seemingly on a daily basis. They call it a fat thumb, a flash crash. This will be short and sweet. Future traders charged with illegal manipulating stock market, contributing to the May 10th market flash crash. A future trader. Futures. Keep that in mind. A futures trader was arrested in the UK today on U.S. wire fraud charges, manipulating charges in connection with an alleged role in the May 2010 flash crash when the Dow Jones Industrial Average plunged 600 points in 5 minutes. Now keep in mind, this was 15 years ago. 600-point move back then was significant. Today, it's a sneeze. This guy, Sarao, 36 of the UK, was arrested in the UK, and the U.S. is requesting extradition. Sarao was charged in federal criminal complaint in the North District of Illinois with 1 count of wire fraud, 10 counts of commodities fraud, 10 counts of commodities manipulation, and 1 count of spoofing, a practice of bidding or offering with the intent to cancel the bid or offer before execution. We see this all the time these days. According to allegations in the complaint, which was unsealed today, Sarao allegedly used an automated trading program to manipulate the market for E-Mini S&P 500 future contracts on the Chicago Mercantile Exchange. E-Minis are stock market index and futures contracts based on the S&P index. Sarao allegedly manipulated and earned him significant profits and contributed to a major drop in the U.S. stock market on May 6, 2010 that came to be known as the flash crash. On that date, the Dow Jones Industrial Average fell by approximately 600 points in a 5-minute span, following a drop in the price of E-Minis. According to the complaint, Sarao allegedly employed a dynamic layering scheme to affect the price of E-Minis by allegedly placing multiple simultaneous large volume sell orders at different price points. A technique known as layering, Sarao created the appearance of substantial supply in the market. As part of the scheme, Sarao allegedly modified these orders frequently so that they remain close to the market price and typically cancel the orders without executing them. When prices fell as a result of this activity, Sarao allegedly sold future contracts only to buy them back at a lower price. Good for him. Conversely, when the market moved back upward as the market activity ceased, Sarao allegedly bought contracts only to sell them at a higher price. Yeah, buying low and selling high, or selling high and buying low. You gotta love it. Again, this is the creativity you're gonna find when somebody has a lot of time on their hand. This is their job. This is what they do all day, every day, and they get bored. And we read about this stuff every day. Day traders, we have professional traders that are always trying to find an edge. Sometimes they get away with it, and sometimes not. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.